All right, so today I wanted to make a video on options. This is a new account that I have created recently. And a lot of people ask about options, how do you trade options and stuff along those lines. So I wanted to make a video on that. So first things first, if you get value out of the video, please like and subscribe. Check out the links below as always. So like I said, this is a new account, and my strategy for this account is to trade options, get income, use it to invest in the profits, at least some of it used to invest in Bitcoin, into some other things as well, save money as well for some future purchases. So my strategy for this is obviously the options, but you'll notice I have STRC and STRF in here. STRC is money that I'm setting aside for taxes because this is a margin account. So again, you got to pay taxes. So this is money that I'm setting aside for taxes. STRF is money that I'm setting aside for future purposes. And again, I talked about STRC and STRF a lot. And again, I'm putting my money to where my mouth is there in buying these. So I did do this last week, and I sold I sold 4 puts on MSTX. 3 of them ended up being in the money. So again, I have 300 shares. So I kind of have 2 options. I could just dump the shares and I could turn around and sell puts again. I could have rolled the options as well. My strategy for this is if I can roll the option and still make money for that following week, I'll do it. If not, I'm just going to take the shares and I'm going to sell a call close to at the money. Now, a lot of people probably don't know what I mean when I say that, but when you're rolling options, basically what that means is you have a strike that is whatever, it's the end of this week. Rolling it simply means you want to defer it to the next week or the week after or whenever. That's what rolling means. So sometimes, though, the problem with that is that you can't roll it to where you can actually make money the next week. You might have to go 2 weeks, 3 weeks, 4 weeks out. And I don't want to do that. I want to be making money every week. So I took the shares. So now that I have the shares, we can go into the options chain and we can trade options. So again, currently we are around a little over $13 US per share. So basically I'm going to sell the 13.5 call, just because when I have the shares, even though this is probably like a 35, 45 delta, this basically means that it's probably roughly a 50-50 chance this ends up being in the money. Again, I don't know the exact numbers off the top of my head, but 50-50 chance probably this ends up in the money. So when I have the shares, I'm a lot more aggressive in my pricing, and I'll get into that when I start selling puts. But when I have the shares, I'm going to sell close to the money because at the end of the day, I don't want to be owning the shares. I'd much rather be selling puts than selling calls. And the reason for that is that there's less risk, in my opinion, which is a whole nother rabbit hole in and of itself. But so again, as you can see here, the bid-ask spread between 60 and 70 cents a share. When it comes to options, with very, very liquid options, typically the bid-ask spread is going to be a little bit tighter than this. But for this one, I'm simply going to set it at, let's say, 0.61 for now. I will submit the order. And it did not fill, so I'll give it a minute here and I'll wait for it. I might have to come back to it. So the next one I'm going to trade on is SOXL. This is the levered semiconductor ETF, and I am going to, shares are currently at just under $49. So I'm going to guess, I want to sell roughly 20 delta puts. This one's at 15.5. Do I want to go? I don't want to go to 44, to be honest. I'm going to be a little bit conservative here. I'm going to sell the 63. I'm going to sell the 43 put. Sorry. See, the bid-ask spread on this one's definitely tighter. So this is a more liquid ETF, at least today. So we're currently at 65. So I'm going to sell that 65. Again, also did not fill yet. The next one I'm going to go to is the BITX, which is the levered Bitcoin strategy ETF. And it's currently around $45 a share. So I'm probably going to go to like 40. What's the 42? This is probably a little above 20. Yeah, 25. So we'll go down one more. It's about 21. So I'm going to use that, currently around 55. This one, the bid-ask spread is wider, so it might be a little bit harder to get filled, but we will figure that out. Actually, that one filled, surprisingly. So I made actually that one sold for 69. So I made $69 there. And then I do still have a little bit of room left to work with here. I don't know exactly how much. I'm going to have to play around with it a bit. If I go back to MSTX, I'm probably going to want to sell 11.5 roughly. I don't know how much money I have, so I'm going to have to play around. Let's start with 3 contracts here. So apparently I do have enough money for that. So I'm going to try to switch that to 4. Okay, so that is basically how I use options here. Basically all I'm doing here is I'm capturing volatility, right? When you're trading options, the amount that you're going to get paid for selling a put or selling a call is going to be based on, number one, the time to expiration, but number two, the volatility or the expected volatility of the underlying index. And the reason that I trade these ones is you're going to get a lot of volatility, but with a lot of volatility means you could lose money if you're not careful, right? Which is why I prefer to sell puts as opposed to calls. The reason for that is that if you have the shares, right, if you have the shares like I do MSTX, I have 300 shares, and the price goes down, then you're going to have to either choose between selling further out, which limits the amount of money you can make on a week-to-week basis, or you're going to have to risk losing money. Now, for me, it kind of depends. It kind of depends because if I can roll the option, I'll roll the option. If not, I'm just going to take it and I'm going to sell it. I might have to take a temporary hit, but it is what it is. So far we have made $69. Let's adjust this here. Okay, so this one's actually gone down. So let's go down to 50. It probably will fill here. Yes, so I made $150 there. SOXL, let's adjust this one. We're down to 62. That one did not fill yet. I will give that a minute. And then the puts on MSTX. That one filled. So I made $100 there. I made 150, so I'm up to 250. 69, so I'm up to $319. And then I just have to wait for this. SOXL order to fill. It could have easily came down. So like I mentioned earlier there, the strategy is pretty simple, right? It's just to sell puts with about a 20 delta, right? About a 20 delta. And delta is just measuring if the share moves a dollar, how much is it going to move, right? So the lower the delta, the more likely you are to, or I guess a better way of explaining it is the lower the delta, the less likely you are to be assigned or have to roll the option, right? So if you have one that has a 40 delta, then it's pretty likely that it's a lot more likely that you end up with the shares than if it has a 20 delta. Same goes for that. So basically what I'm saying is the lower the delta you trade, the more conservative you are being. That's my way of understanding it. So a lot of people probably see when you go to the options chains is the closer to the money, the more you're going to get paid, right? So again, MSTX is currently at 13.09. If I sell a 13 put, I'm going to get $75. If I sell a 12.5 put, I'm getting $50. If I sell a 12 puts, I'm getting $40. So a lot of people probably say, oh, I can sell the 13 and get 75. Why would I not do that? Well, the reason is that you're a lot more likely to be assigned or to have to roll the option. So that's why you don't necessarily want to sell the option that you are going to make the most money with, because it also means that you're less likely to make money in the long run. So you want to be a little bit conservative, but you don't want to be too conservative, right? There's kind of a middle ground. My middle ground with selling puts is typically that 20 delta, right? That 20 delta, because in my opinion, it's the best combination of being able to make a good return while also not taking too much risk. So that's basically my opinion on that. This order is still not filled, and honestly, it could take like another 10 or 15 minutes. So I'm not going to sit around and do nothing and wait for it to fill. So that is how I trade options. Like I said, you're going to need a margin account to do this. You typically can't do this in a tax deferred account, but you're going to need a margin account. So that is trading options. I do plan on doing updates on this once or twice a month. So we'll see how that goes. But like I mentioned at the start, if you got value, please like, subscribe, comment, and stay tuned for more.